Welcome to the new latest episode of Tech Behind That. I am Tuhina and today I am in Dubai and we're going to focus on MENA. MENA has been notoriously laser focused on consumer credit. But why not business credit? There's a $250 billion financial gap in this region. But why isn't any fintech innovation focused on providing businesses what they need, as they are the economic engines of any nation? Today we're going to discuss the daily loopholes and the daily issues that businesses face in this region in terms of lack of credit and in terms of a broken payments infrastructure. I also have Vimal Kumar, the CEO of Omnispay, a platform that is building a new financial operating system for underserved communities here. And we're going to talk about how B2B money movement can be the next great financial unlock for this region. Thank you so much for joining us, Vimal.
Thank you. Thank you, Tuhina, for having me.
Yeah. Why don't you tell us a little bit about yourself, what you do, and also about Omnispay and how it's better than its competitors here?
Right. Okay. Firstly, thanks for having me on your show. It's a pleasure to be here to exchange some views on a subject that's not oft discussed, not for lack of interest, but primarily the focus has always been on the consumer side of any business. So firstly, I think my introduction is very simple. After 30 years in corporate, I stepped away to create a business proposition along with some old friends who are co-founders today with me. And we are essentially dabbling in the B2B payment space, something we passionately believe in, having firsthand witnessed the pain points of that segment, working in the Middle East and Africa region. It was a personal passion that began this journey, and we've come a fair distance at this point in time to an extent where Omnispay has now started making waves in this space. It's a talking point amongst our customers, which makes us very happy, and it is also attracting a lot of interest from potential investors and the community as a whole. So that's really where we are at this point in time. Omnispay came out of really solving for a huge gap in this region. It's not just a UAE problem. It's really the whole region where we believe the pain points of the entities that are at the mass and the lower end of the mass segment are fairly underserved. They are not necessarily top of the charts for commercial banks. They do not get the kind of financial solutions and the attention that they need to really drive their businesses and really take them to a scale position. One of the things that is less understood is that the SMEs really power majority of the GDP growth and also much of the employment generation in this part of the world. And therefore, to that extent, it's quite incredible that the segment has survived and thrived on its own and using the informal sector to grow, and not really had the support of the financial system. And that's where we decided to pitch in, and we said that we're going to make a stand here and create what we call as the invisible infrastructure that will power the financial system for these SMEs. I mean, I hate to use the word banking. It's often cliched. I think of ourselves as really that invisible layer which is helping these SMEs power their businesses, digitize their operations, and getting them access to the formal economy. So that's really where we are, Tuhina. The opportunity, as you rightly said, is much bigger than the 250 billion. We estimated that in the UAE alone, the addressable market is in excess of $600 billion. So it's a very large opportunity that is there, but the opportunity requires significant amount of heavy lifting. It's not an easy problem to crack. that sector is unorganized, the sector is not being served well, financial literacy is not great amongst the customers at that level. So there's a hell of a lot of effort required to really build the base. And once you build the edifice, then the next level of growth becomes fairly more simpler. But is that heavy lifting required that most enterprises avoid getting into, because there's so much of revenue opportunity in the creamy layer that the commercial banks have always focused there and have not really bothered trickling below that layer. And it leaves the opportunity for players like us to come and build something that's sustainable, that's essentially being welcomed by clients in that segment who now feel recognized, who feel that their needs are being addressed. So we feel kind of it sort of reiterates the proof points that we had when we started this journey.
Very interesting. So why do you think commercial banks here don't really want to focus on underserved communities, individuals, but also businesses? And is there a systematic way or the systematic reason or cultural reason why consumer and business debt adoption is very slow in this region?
Yeah, look, so they're two separate things. Look, the consumer debt adoption, I wouldn't say is slow. The consumer debt adoption is fairly adequate for the size of the opportunity in this market. It's a very commoditized segment. Everybody's kind of has the same kind of products, the same pricing structure, the same repayment structure. There's nothing differentiating the offerings of one institution to the other. The consumer credit or the consumer lending sector has always been the low-hanging fruit. It's the easiest thing to crack. Everything is salary-based. You've got all the data points required. You understand that consumer risk fairly well. Now with the establishment of credit bureaus, things have become largely more organized. There's really statistical analysis available, which helps you rank order the risk of these customers. So it's always an easy problem to solve. And that's the reason there's a lot of effort that has gone into building the consumer credit businesses in this part of the world. Secondly, Islamic finance is now becoming more and more popular. With the advent of Islamic finance, it is addressing the needs of those who have a particular faith and have an aversion towards paying interest on borrowings. So that has also addressed a particular need that was there from long. However, when you think of the business segment, the enterprise segment is very well served. All entities, all businesses are very well served. There's nobody who does not get attention. It's what I call the creamy layer. It's the more easier problem to crack. They are more organized. They're fairly more digitized. They've got a structure, a governance. They've got paperwork. They've got audited financials. So there's everything that a banker needs to understand the cash flow position of those enterprises, to understand the risk, and therefore make a judgmental call on how good is he for a line of credit. But when you come a couple of levels below, all these factors that I mentioned do not exist. So banks traditionally built their operating model and their systems and their go-to-market to really serve the creamy layer, because your revenue per customer is fairly high, and therefore you can build a cost-to-serve model. But that same cost-to-serve model, you cannot just bring that down to the MSME layer. That layer requires a very different effort. It requires a very different thinking, and it requires a certain higher level of digital transformation to be able to address the pain points. So to that extent, there's a lot more heavy lifting required. Secondly, the risk profile of those customers are not as well understood as you would understand a client in the enterprise segment. So therefore, those risk models have to be built, those risk profiles have to be understood, and then you put out a risk appetite for that segment. So all this requires significant higher level of effort, but the reward or the perceived reward per customer is much smaller. You've got a lot of customers, but your average revenue per user is much lower. So to that extent,
in comparison to what?
In comparison to the enterprise segment, okay, or even the consumer segment. So to that extent, banks have really preferred to operate in their comfort zone. They were preferred to operate in segments that they understand really well and where they know that there's predictability in cash flow, predictability in revenues. And that comfort has prevented them from really looking below the hood to see who are the segments that are still left untouched and are yet such large contributors to the economic growth in this country.
Very interesting. So what I find very interesting about MENA is that how fragmented it is. And if you want to scale, if Omnispay wants to scale across MENA, then how do you plan to build that trust with those businesses, first of all? And secondly, how do you market to them?
So it's an interesting challenge, right? See, the MENA region is very large.
Yeah.
You're really talking about, close to if you look at North Africa as well, close to about 500 million people living in this part of the world. So it's a very large geography. We've just begun to scratch the surface here in the UAE, and as we've continued to build and scale our business, we've realized that there is such a long way to go to even start making an impact into the core target audiences in this market. You talk about trust, in the world of financial services and especially concerning customers. Trust is a currency, right? So trust is a currency. You earn that very slowly.
Yeah.
And therefore you have to spend it very, very carefully. A lot of businesses make the mistake of taking trust for granted.
Yeah.
And then there are incidents that completely erode that trust, and then the ability of that business to really make a comeback and a stand.
Yeah.
So to that extent, I think we've approached it very, very cautiously. We've not taken our customers for granted, and I don't say this as a very cliched statement. You'll hear a lot of people actually talk about a lot of customer service, but don't really do much about it. It's just speak. It's nice lip syncing that a lot of people do, but we've realized that we're in the space where we're just building a business from scratch. There was a speck of sand, and now we are attempting to build a house out of it, and that house cannot stand if we do not really deliver what we are promising. So to that extent, we have put a lot of focus in building that trust. And why do I say that? Because we deal with customer payments, and for the SME, that payments is like his lifeline. It's his blood. So you cannot disrupt that flow in any way. So we commit to our clients that we settle in 24 hours. We settle in 24 hours. There's no excuse. We don't give an excuse why that 24 has become 36 or 48. We don't do that. We're able to achieve 99% of accuracy in that promise we've made. The second thing is we built machine learning based systems that are helping us understand the risk profile. That risk profile is helping us scale a scorecard for a segment where nothing existed before we actually started dealing with them. So we're building using payments data. We're building scorecards that help understand the risk profile and then create a credit appetite. So we then present a line of credit. So to that extent, It's the whole value chain where trust plays a part in everything that we do. So for us, it is really, you're right, it is fragmented, but we are trying to piece that together. I mentioned earlier that it is really that invisible layer that we are creating. Without the customers understanding how we are actually helping them transact, we are slowly and silently building the rails for what will become a full-fledged financial enabler in the future.
And what I'm very curious about is that, as you said, that banks don't have a lot of incentive to serve those smaller businesses in this region. But why did you choose to do it? Like, is it just because you wanted to create an impact in this region, or is there a business case to it?
Yeah, so it's really both. There's a lot of impact investment that we considered. And when I mean investment, it's not money. The impact investment of creating a business value that can actually help those who have never received the help and support that they've needed. And let's look at it from a hard numbers perspective, right? 90% of the private sector employment, at least in this part of the world, comes out of the SME and the MSME segment. So it's a huge employment generator, which then has a ripple effect on the way GDP growth is impacted in this part of the world. So people always link GDP growth to the big corporates and the big houses. Yes, they do play a part, but the unsung heroes are really where we are playing. And therefore we consciously wanted to come here because the pain points here have been left unaddressed for decades. So what is the role of a new entity that wants to come into the financial technology space? It's not to do more of the same, right? If we wanted to do more of the same, I would have gone into retail lending and created a digital lending platform here, which would have sold like hotcakes, right? But that's not the point. We did not want to go and sell more credit cards, digital credit cards, and personal loans. That's something everybody else, 20 other people who are doing this, or maybe even more. We wanted to go in and genuinely solve a problem. We wanted to go in and genuinely address the needs of a segment that we very strongly and passionately believe in. I worked in this region, in the Middle East and Africa region, for the last 20 years of my life. And I have personally seen the struggle that the lower end of the SMEs and the MSMEs go through. The fact that they are always left out. They are always last to be considered. And yet they are such a major part of the economic journey of any market, whether developed or developing.
Yeah.
They continue to be a large part of that economy. And therefore, it was a conscious choice. And all three of us, my two co-founders, we truly believed in this opportunity, and we wanted to go in and make a difference to the lives of our clients. So for us, this was not about making a personal statement. It was really chasing that value. Is creating the value without the hype. We did not want to get into the hype cycle that you see a lot of enterprises get into. We genuinely wanted to chase value. And
so on that point, I wanted to know, what is if you would have to tell me the B2B money movement market size as against the consumer credit market size, what is the difference like? Do you have any numbers that you can tell us?
The B2B, we did an analysis of the total addressable market when we were kind of writing the first few strategy points for setting up Omnispay. So we looked at really the non-oil GDP of the UAE, and through that, I mean, it's a very complex calculation to come to a TAM, especially because we had to really rely on a lot of published reports from the central bank and the the Ministry of Economic Development, etc. Because this hadn't been done before. And we actually came to a figure of about $600 billion, which is the addressable market size for B2B in this country. If you look at the MENA, I would say it's in a few $1 trillion, because Saudi obviously is a very, very large market. And then you've got Egypt and some of the other markets in North Africa that are quite substantial. So it's about a 2 trillion market size. Now this does not take into account still a lot of the cash economy that is unaccounted for. And it's very difficult to really come to a very accurate number. But to me, 600 itself is something that I don't think we will be able to eat that whole cake, or even 10 of us, 10 companies of our sort will be able to kind of cut the cake and eat the whole pie. So to that extent, the opportunity is fairly more substantial than most people think. But like I said, it requires a lot of hard work. It requires a lot of commitment, and you really, really have to put your stake in the ground and then stay the course, because this is a segment of the economy where it takes time to get customers to understand what you're doing, to onboard them, to get them to start using the platform, because they are not used to digitization. Let's be honest, they're used to the traditional ways of working. They work off post-its and chits and pieces of paper. And then to suddenly tell them that, but we've got a dashboard and we can actually, create your profile and show you your ins and outs and your payables and receivables. Takes time. I think there's a friction to the change in behavior as well. In the beginning, they think that it won't make sense. So like all of us, people are resistant to change. Right? We are all resistant to change in our own ways. And so are these clients. So to that extent, you have to stay the course. You have to be patient, and you build that business brick by brick, slowly but surely. It's like onwards and upwards, but slowly.
Very nice. And would you like to give us an account of how Omnispay has affected positively one of your clients?
I mean, look, there's a lot of stories, and actually the team, you keep circulating the good stories. But to me, I think the one story that stands out is, and I don't want to specifically name the SME for privacy reasons. There's a tour and travel client that we have. They were one of our first clients who came on board, and like most of the SMEs, his problem was very simple. He had a 14-day time to pay his supplier, but his clients would pay him in 30 to 45 days. So he had that cash flow problem, and he used to kind of run helter-skelter trying to meet that 30-day gap between his payables and his receivables, and to an extent where he used to resort to a lot of informal ways of organizing the funding, which was expensive. So we helped him by digitizing him onto the Omnispay platform, by settling his transactions in a single day, something that would take him 7 to 8 days in a conventional situation. Secondly, what we did with him is that with about 6 months of his transaction history with us, we were able to build his scoring profile, a risk profile, a basic one, nothing complicated. And to that extent, today we have been able to extend a line of credit to him, which is effectively helping him manage this gap and manage it in an affordable manner, and manage it in a very flexible terms. So from a numbers perspective, when we first acquired him, he used to transact about $40,000 a month on our platform. Right. Today he transacts close to $200,000 a month on our platform, and then we've extended a line of credit which is about $70,000 to him, based on his his rich transaction history that we've been able to capture. So this is just a small example of how if you systematically approach the pain points and if you create solutions for clients in this segment, you can actually help them scale their business. You can actually help them create value, create employment, and in all this, create his personal wealth.
What do you think about credit and how to, there's a huge word, there's a huge demand for the word financial inclusion, right? Inclusion. How do you look at inclusion? Do you think you're also partnering with Yabex to also extend your lending arm? How do you want to proceed with it? What do you think of financial inclusion? How to make it more sustainable?
Yeah, I think, look, financial inclusion for me does not start with just the lending opportunity. Financial inclusion really starts with the ability to have a bank account. That's the most primary need.
Yeah.
And that's also a significant problem for a lot of the clients that we serve. It is a struggle for them to get a bank account opened, given the compliance requirements, given the documentation requirements.
That also, I think identity, connecting identity to the bank account.
Exactly.
Also.
So to me, that journey starts when the entity opens a bank account. Right. So financial inclusion starts there really. The lending part comes a bit down the line. So we've had the good fortune of working with Yabex, and Yabex is an organization that I have known for a number of years. In my previous role as the group CEO for Airtel Money, we used Yabex in a number of geographies in Africa. So the comfort of working with Yabex was always there. Secondly, I think the risk models, the process governance that Yabex brings to a relationship is something that you don't find in a lot of other digital lenders who have emerged in this space in recent times. So to that extent, I think there is a lot of what you call trust that we built with Yabex. The leadership is very mature, talented leaders. The risk team, the data team, they're absolutely wonderful professionals. So for us, like I said, we keep the trust of our customers by also partnering with others who we trust. So it's the customer's trust to an extent that we are consuming when we decide to partner with entities like Yabex. So we are very careful when we choose. And with Yabex, that was always a key consideration that we don't really have to keep looking behind to see did we make the right decision. So it has been a good journey with Yabex. We believe the opportunity, like I said, is massive. It's going to only be restricted by our ability to put out balance sheet and to be able to effectively collect from our customers and also service them as and when the need arises.
I know you have a lot of time. You have a time crunch. I have a lot more questions. It's such an interesting conversation with you, but I'd probably end this interview with one last question. I have a lot of questions, but one last question would be, how do you see MENA change in the next 5 years? What do you think the changes are going to come in the next decade, maybe?
Yeah, look, I think not just MENA, but this whole region, especially the emerging economies, I think in about the next 3 to 5 years, fintech will no longer be a domain. It'll really become a way of life. To that extent, it'll stop being called as the startup ecosystem and the enabler, etc. I think fintech will become a part of everybody's existence. The the disruption will continue as new technologies emerge, with AI growing leaps and bounds. The ability for solutioning is going to become much faster. I'm not going to say that all fintechs together are going to put commercial banks out of business, but
probably work together.
Definitely, the challenge will multiply in the coming years. The success is really going to be based on two factors. One is how quickly we all collaborate amongst ourselves. And I say that because I think customers are looking for integrated solutions. They're not looking for fractured solutions. They can't go to one fintech for one problem, the next guy for another problem, the third guy for something else. So
bundled.
So entities will have to come together, right? They will all have to start linking into each other, eventually creating a very large market space. So the customer enters through one, and then has the benefit of really using the other partners in that ecosystem to solve all problems, address all the pain points, take care of all their needs. So think of the fintech ecosystem in the future as a huge super app. It doesn't matter what the entry point is, right? It's what you're providing after you enter, which is really going to determine the success of most of us in this space. And therefore, I strongly believe in partnering. I don't think everything should be cooked in your own kitchen. There are a few things we are good at, which we will continue to do. There are a few things that others are good at, and I want to partner, like Yabex.
Yeah.
You're good at digital lending. You're good at consumer risk, entity risk. I want to partner with you and use your strength. Similarly, we are speaking with certain entities who are good at cross-border payments. We're speaking with entities that will bring crypto into our ecosystem. So I would like to think of this whole system in the next 3 to 5 years as a huge super app. So the customer might enter through Omnispay, but then can navigate through that whole web that we create and get all his needs served. That's I think number one. Number two, I think regulations are going to be more beneficial in the future to drive the right kind of behavior. It is going to make systemically, it is going to make things more safer and secure for not just the operating entities, but also for clients. And thirdly, I think the success of anybody playing in this domain is going to be dependent on how you're pivoting. Because it's not necessary that the proposition that you came up with will always be your winning proposition. Your success is going to be dependent on how quickly and how intelligently you pivot to what the need of your customer is, and that those needs are constantly changing. We came in designing Omnispay in a certain way. Today, when I look at Omnispay, we are not how we designed it, and we are constantly pivoting. So I think the success is going to come from the pivot. And like I said earlier, don't follow the hype, follow the value. You follow the value, you'll create something that is sustainable.
That's wonderful. Thank you so much, Vimal.
Thank you, Tuhina. It was really wonderful talking to you, and I do hope your listeners will enjoy our conversation.
For sure. I'm absolutely sure about it.
Thank you.
Thank you so much for watching, guys. This is Tech Behind It, powered by Yabex.
Thank you.